Welcome to another episode of Tesla Stock Daily Drive. I'm your host, Dusty, and today we're diving into the currents and undercurrents of the U.S. stock market as it closed slightly higher yesterday, June 9th, 2025. Investors kept their eyes peeled for news from the ongoing trade talks between the U.S. and China. The S&P 500 and the tech-heavy NASDAQ composite both edged up, with the S&P climbing 0.1% and the NASDAQ gaining 0.3%. As for the Dow Jones Industrial Average, it decided to take a breather and remained relatively unchanged. This follows a strong previous week where the S&P 500 broke past the 6,000-point mark, lifted by an impressive May jobs report. The markets have been riding a wave of optimism recently. Concerns about tariffs have eased, corporate earnings have impressed, and positive economic indicators have given investors a reason to smile. Among the tech giants leading the charge, AI chipmakers are particularly shining bright. Now, let's zoom in on our focus for today, Tesla. On June 9th, Tesla's stock closed at $308.58, marking an impressive rise of 4.31% from the previous session. Now that's after a roller coaster day, where the stock opened at $285.95, hit a high of $309.83, and dipped to a low of $281.85. Despite the ups and downs, this marks a notable chapter in Tesla's volatile journey, one that even included a public spat between Elon Musk and former President Donald Trump just last week. However, it's worth noting that Tesla stock has been lagging behind the S&P 500 so far this year. Having lost about a quarter of its value since the beginning of 2025, it also stands as the weakest performer among the Magnificent Seven tech giants. The rally we saw on June 6th, which gave Tesla a 3% bump, was partly thanks to the U.S. jobs report that eased recession fears. But the start of this week threw some curveballs Tesla's way. Downgrades from Argus Research and Baird put a spotlight on the company, with analysts voicing concerns over Musk's public dealings and Tesla's ambitious plans for its robo-taxi business. Looking at the broader market sentiment on June 9th, there was cautious optimism. The hope for progress in U.S.-China trade and strong economic data seemed to outweigh the midweek slowdown caused by tariff concerns and unease in one of the mega-cap tech stocks. So, what does this all mean for investors? First, it's clear we're in an environment where staying informed is critical. If you're eyeing Tesla or any stock in the tech sector, keep an eye on both fundamental trends and the macroeconomic backdrop. A quick tip for the road: diversification remains key. While tech stocks are currently driving the market forward, having a well-balanced portfolio is essential to cushion against volatility. Always remember, the larger economic picture can shift swiftly. As we wrap up today's episode, remember, investing isn't just about numbers and news. It's about understanding the narrative and knowing when to act or pause. This reflection is what helps us build a resilient financial future. Thank you for tuning in to Tesla Stock Daily Drive. Until next time, I'm Dusty, reminding you, when the dust settles, only the truth remains.